It's April 16th, JLD here, and welcome to MSTR Today. In this show, we're going to talk about risk versus reward when it comes to MSTR. We're going to talk about corporate Bitcoin adoption across the board, how gold leads MSTR by an average of 13 weeks, and what that means coming up. Strap in. We'll also be talking about Strike and Strife, giving more details on that, two critical components of strategy. Plus, I have two amazing videos you're not going to want to miss. This video is not financial advice, but please do comment below. Just let me know where you're watching from, what you're thinking. And again, just comment for support. Your comments on these videos mean a lot. So thank you. Even your likes mean a lot as well. So thank you for that. And let's dive on in. Okay, today's first post is from Michael Saylor, who just wants us to meet him at the top. Listen, Michael Saylor knows he's there. He knows he is just sitting upon a pile of Bitcoin, the world's apex predator when it comes to store of value, 531,000 plus Bitcoin and growing. He will never stop. Strategy is going on a rampage. They are becoming a multi-trillion-dollar company in the future. I truly believe that. They are in the making of that. That is my belief. I believe it's inevitable. Michael Saylor, you're at the top. I'm meeting you there. Let's go. And Strategy wants us to know that MSTR is the tip of the spear. And this is the Sharpe ratio, which has MSTR at 1.3. And then Tesla's at 0.8. They're in second place. And then as you can see, the Magnificent Seven really drops off a cliff going down to the right. So MSTR is the tip of the spear. Now, what exactly is the Sharpe ratio? Well, I pulled it up on Wikipedia. In finance, the Sharpe ratio measures the performance of an investment such as a security or portfolio compared to a risk-free asset after adjusting for its risk. It is defined as the difference between the returns of an investment and the risk-free return divided by the standard deviation of the investment returns. It represents the additional amount of return that an investor receives per unit of increase in risk. And it was developed by William Sharpe in 1966. So going back to this post, it's not even close. MSTR is the tip of the spear when it comes to the Sharpe ratio. The next post is coming at us from Bitcoin Archive, who wants us to know that corporate Bitcoin adoption is accelerating as they bought a record 95,431 Bitcoin in Q1 2025. Now, of course, MSTR's a big part of this. But still, look at what's been happening over the quarters. It is accelerating. That's why it is slowly and then suddenly. And it's just accelerating. And this, again, is a win-win game because as other companies and corporations and treasuries and nations and governments start to acquire Bitcoin, everybody wins. Why do you think Michael Saylor is just out there spreading this as much as possible? Because he knows that this is a win-win scenario for Bitcoin and those that hold it. And of course, strategies at the top of that game. Now, the IMF is always telling Bukele of El Salvador to stop buying Bitcoin, and he just refuses. All he does is stack at least one Bitcoin a day, at least. Sometimes he does bigger buys, but all he does is stack Bitcoin because he knows, just like so many people know, you can never have enough. Now, the Bitcoin Archive also posted that this was just in. Brazil's fintech Meluse proposes making Bitcoin investments one of its primary corporate missions. Saylor Strategy Unlocked. This is just another example of a massive company, this Brazil fintech company, making Bitcoin investments one of its primary corporate missions. And what happens when you make it one of your primary corporate missions? Well, then you see what happens, and it then becomes the primary, and then it becomes the only, period, end of story. Now, Chris has a really exciting post about gold. He says, Bitcoin typically lags gold by 13 weeks, give or take. If this chart by CBC is anything to go by, Bitcoin is going to rocket over the next few months. Strap in, fam. And now you can see the Bitcoin and the gold over the past 6 weeks, the changes, and you can see where gold went. And if this is a 13 4-ish week lag, obviously this is where Bitcoin is going. And let me tell you, when Chris says strap in, I strap in. Now, Strategy Archive had a great post I wanted to share. It's Strategy will never be able to pay for the dividends on Strike and Strife. This is what a lot of people talk about. I see this in my comment section as well. So I wanted to go over this very good thread by Strategy Archive. And the thought is with baseline annual obligations of 120 million from Strike, that's 8%, and Strife, 10% preferred shares, this Bitcoin treasury experiment looks destined for failure. This is what a lot of people are saying. And here's a graph you guys have seen before, but it just breaks down the three products here: MSTR, Strike, and Strife. Now, Strategy Archive says, not true, of course. Let's analyze what Strategy can actually do. While their software business generates 60 to 70 million in annual free cash flow, Strategy has multiple pathways to address these dividend obligations beyond traditional cash flow. Strategy's exceptional trading liquidity, consistently ranking among the top 10 most traded equities, allows for strategic ATM offerings on common stock. Just minutes of targeted ATM activity could effectively raise capital with minimal market disruption. Again, that's minutes. And that would be for an entire year to raise that capital. Here's the core concept. Strategy issues preferred shares at 8 to 10% yield, raising hundreds of millions. They immediately buy Bitcoin with these funds. Even after paying dividends for decades, the Bitcoin purchase today will likely be worth far more than all dividends combined. Think of it this way. Strategy buys Bitcoin today with preferred share money, then pays dividends over time. The break-even question is simple. When does the total paid in dividends exceed the value of Bitcoin purchased? With Bitcoin's growth rate, this could take 50 to 70 years, if ever. Unlike unlike common stock, Strategy's preferred shares feature self-correcting yield mechanisms. If Strike or Strife prices decline, their effective yield increases, attracting yield-hungry investors and creating natural price stabilization during market turbulence. And Strategy has deliberately created multiple capital raising options for any market condition. When Bitcoin prices drop and convertible bonds or common stock ATM offerings offer unfavorable economics, the 10% Strife can still attract investors seeking yield. And the strategy targets distinct investor profiles. Strike appeals to the total return investors wanting yield plus equity upside, while Strife targets pure yield investors like pension funds seeking stable long-term duration returns. This isn't just about funding dividends as part of Saylor's broader transformation. These preferred offerings are building blocks towards Bitcoin-backed financial services that will generate additional revenue streams, ensuring long-term dividend sustainability. So if you have any questions about Strike or Strife, this is just a little insight into what and how they operate, into what they are and how they operate. Now, we have two great videos you're not going to want to miss as soon as we get back from thanking our sponsors. Online shopping has never been easier, but this ease is new enough that we remember a time when entering all our credit card info every time we purchased something online was the norm. Luckily, we don't have to do that anymore thanks to Shopify. That's right, that purple Shop Pay button that makes it seamless to purchase online is powered by Shopify. And Shopify doesn't just make it easy to buy, it makes it incredibly easy to start a business no matter your experience. Shopify is the commerce platform behind 10% of all e-commerce in the US, and they make it super easy to get up and running with beautiful, ready-to-go templates and built-in marketing and email tools. Worried about tracking inventory, payments, and analytics? No stress. Shopify helps you manage it all from a single dashboard. And back to that iconic purple Shop Pay button, it's why Shopify has the best converting checkout on the planet. If you want to see less carts being abandoned, it's time for you to head over to Shopify. Sign up for your $1 per month trial and start selling today at shopify.com/MSTR. Go to shopify.com/MSTR, shopify.com/MSTR. So check it out. I know we're all looking to stack more Bitcoin and MSTR, and to do that, we need more fiat. So let's chat about our sponsor, ShipStation. We all know the market can seem pretty chaotic at times, but if you're in charge of order fulfillment for your business, you already understand chaos. While we might not be able to help calm the chaos in the market, ShipStation is here to help when it comes to shipping and fulfillment. I've used ShipStation to easily automate shipping to customers around the globe. My favorite part about the platform, managing orders in one simple dashboard makes an otherwise massive task feel pretty darn simple. Plus, ShipStation not only integrates with the services and selling channels you already use, it's also the fastest, most affordable way to ship products to your customers. ShipStation hooks you up with discounts up to 88% off UPS, DHL Express, and USPS rates, and up to 90% off FedEx rates. Calm the chaos of order fulfillment with the shipping software that delivers. Switch to ShipStation today. Go to shipstation.com/MSTR to sign up for your free trial, or click the pinned comment below this video. That's shipstation.com/MSTR. And thank you for supporting our sponsors that allow myself and my team to continue to produce these daily videos for you for free. Now back to the show.
Welcome back to Squawk Box. This morning, I want to take a look at the crypto market right now. Anthony Popliano is here. He's the founder and CEO of Professional Capital Management. Bitcoin now sitting about, $85,000, $86,000 after touching, what was the most recent low? We want to say about $76,000.
Correct.
Where are we going here? And how are you thinking about Bitcoin relative to gold in this particular moment?
Yeah, I think that's what everyone's really talking about right now. Bitcoin is down about 10% to start the year. Gold's up 20%. But if you look out over 1 year, they're both up about 35%. So it's pretty interesting that there's been this divergence. But if you go back and you take a look, you can actually see that gold usually leads these rallies. And nobody really knows why that happens. My kind of guess would be that a lot of the central banks and institutional investors, they're either not approved to buy Bitcoin or they're not used to running to Bitcoin in these moments of kind of geopolitical uncertainty. What we do see, though, is when gold runs about 100 days later or so, Bitcoin not only catches up, it usually runs much harder. And so you get that kind of higher volatility.
How much are you seeing people either buying or selling Bitcoin direct, meaning actual Bitcoin, versus playing the ETF market, and the ETF market effectively buying the Bitcoin or selling the Bitcoin on their behalf?
Yeah, I think you get both now, right? It used to be obviously all retail and all direct and spot market, but I do see a lot of people using these ETFs. And I think what a lot of people kind of missed over maybe the last couple of months is there was a sovereign wealth fund that came out and said, hey, we actually got Bitcoin exposure through the ETF. And the reason why I thought that was interesting is there's a lot of conversation about Bitcoin and the geopolitical kind of debate, if you will. And one of the things is if you are buying Bitcoin and you're actually taking control of that Bitcoin in a self-custody way, you may be doing it for things other than price. You may be worried about the U.S. Treasury market or maybe sanctions or something like that. But if you're buying Bitcoin via the ETFs, you're simply just getting price exposure. You're not actually doing it from a geopolitical strategy standpoint. And so I think there's a lot of countries around the world that are saying to themselves, well, if the United States has a strategic Bitcoin reserve, they're openly talking about the fact that they're going to go buy more, we should have a Bitcoin strategy. Doesn't mean that we have to buy. We could just sit it out. But we need to have a decision here. And buying the ETF allows me to get price exposure, but not actually take on the geopolitical risk of having to talk to you.
Do you think they're going to actually be buying? I mean, that is a big question right now. I mean, yes, we have indicated that we're going to create this reserve, at least initially with, confiscated Bitcoin and the like. But do you think that there's definitely a sort of all green lights ahead for the taxpayer effectively to be buying Bitcoin? Because that's what we're talking about.
Excuse me? They're talking about tariff money going forward.
Yeah. So I went down to Washington, D.C. last week to the White House. I interviewed Bo Hines, who's the executive director of the President's Advisor Council for Digital Assets. And I explicitly asked him this question. The thing that he said to me that I think kind of took away was not only are they going to have the Bitcoin Strategic Reserve, which we have, they are going to buy as much Bitcoin as they possibly can. And
with what money? And does that have to be authorized by Congress?
So there's a bunch of different ways they could do it. I think what they're trying to figure out is what is the best way to do it. And so a couple of examples would be they could revalue the gold. They could sell some of that. They can then go and they could buy Bitcoin.
Does that have to be done with Congress's approval?
There's a debate around who would be responsible, who would be involved. And they have
all this has to be done with executive order? I mean,
well, they have an interagency group right now that's working together. And so at that table is everyone from energy policymakers to law enforcement to economic advisors. Kind of everyone is trying to figure this out. I don't think you're going to see kind of very rash decision making kind of unilaterally, but I do think that working group is trying to figure it out. But you also have things like the tariff revenue or other areas where we may be saving money that we previously were wasting or abusing. And so I think that is probably, to me, the thing that the market most misunderstands is it's not just, hey, we're going to hold the Bitcoin. They're going to actively try to buy Bitcoin. And there's other countries around the world, they may be acquiring Bitcoin by mining and using natural resources that they have there. And so I think there's a lot of strategies here that the U.S. is going to pursue.
This part I am skeptical about, given the question mark about how much money we actually will raise as a function of tariffs. Because if we look, arguably, if we can get down to 0-0, there will be no tariffs. That would be a pretty good outcome too.
Yeah.
So I don't know where that's going to shake out. If you want to lower taxes on tips and everything else, you're going to need to offset that with something else. Effectively, you're buying Bitcoin, you're leveraging up the taxpayer like that. You're basically going to have to sell treasuries to buy Bitcoin. So you could. That's like what Michael Saylor does. It's just in a different format. And the question is whether the American public is game for that. I think that's a very sort of fundamental question.
Well, I think that gold has served this purpose for a very long time. Obviously, the United States has done very well holding on to that gold. And what people are really starting to wrap their heads around is that Bitcoin is digital gold. And so as we head into this world, you need things that are sound money, right? That's ultimately what you're trying to do here. And gold is an analog version of sound money. It's outside of the legacy financial system.
And no one can believe that, if you don't, in this case, if you don't believe it, then it could be a huge mistake.
And listen, I think that every decision they make financially could be a mistake, right? Holding gold could be a mistake in the future.
Right.
So you have to take some degree of risk.
Holding fiat, holding bonds, holding long duration bond, all those things could be bigger mistakes than Bitcoin.
I think that the big shift that's happened, obviously, many people that watch this show probably grew up in a 60-40 portfolio world. A lot of the younger people are saying that 60-40 portfolio no longer works for me. And so things like Bitcoin are entering into that conversation. And as these young people ascend to positions of power and influence, I think they'll have a big hand in making these decisions.
Anthony Pompliano, it's great to see you, sir.
And if you just want Bitcoin to be successful, when you hear the Bank of Shanghai is rolling out a Bitcoin ETF, custody of the Bank of Shanghai, you would say, that's great. That's going to give access to Bitcoin to 1.5 billion people in China. Okay. And they're going to buy a bunch of Bitcoin. The price of Bitcoin is going to go up to $10 million coin. So here's the question. Do you want the billion people in China to be rich? And do you want to be rich while the Chinese government still has a bunch of laws that you may or may not agree with? Or do you want the people in China to be poor and you to be poor while the Chinese government has a set of laws that you don't agree with?
Pretty easy.
Or do you think that you're so great, you're Superman, that you can just go and topple the entire government by barking on Twitter? It's like, I just don't think, right, that you're going to topple, an entire sovereign nation with your ideology. So,
and there you have it, another episode of MSTR today. And here's my receipt from yesterday. I purchased a 0.672 share of MSTR for $313. This is my $210 daily purchase of MSTR for every trading day of 2025. This coming Sunday, I'll reveal my entire portfolio, where I'm at. So exciting times ahead. But remember, there's fear, there's uncertainty, there's doubt. As you saw in the video yesterday, there's sometimes just one day a year, at most a handful days a year, that you simply must be in the market or you're going to miss the outsized returns that result from that. So I'm long-term. I believe it's time in the markets, not timing the markets. I will be here for every God candle up, and I will be here for every brutal pullback. I'll be here because I believe in the thesis long-term. I believe it's inevitable, and that's inevitable with a Bitcoin B. It's inevitable. And as Michael Saylor says, there is no second best.
what's the second best? There is no second best.